Morning, everyone. I hope everyone's having a wonderful holiday so far. It's the time of year where we like to reflect on our portfolios and see if there's anything that we think we might change in the upcoming year. So one of the most important aspects that I look at for stocks is dividend growth. So here I took a few minutes to put together a nice little chart with the stocks that I own here in this column. Over on the far left is the current yield of that stock, and then over here in the four columns on the right, I went back to look at how much the dividend grew for each one of those stocks during the previous 3 years, counting this year. And then there's a few of them that already have dividend increases put in place that will begin in 2024. So if we look at the top here, we've got TELUS, very strong stock, and the dividend growth rate is pretty consistent here between 5 and 7%, which is, pretty much exactly what you're looking for, and it's already got a strong yield of 6.46%. So I will definitely be looking to continue to add to my position in TELUS. I also think it has really good growth potential as well in terms of stock value. Next up is Manulife. So Manulife, last couple years has been very strong, 10+% increases. 2021 there was no increase. Again, sort of, I think they did increase it towards the end of 2020 as well, but things were a little bit confusing during the pandemic there as well. Anyways, it turns into a nice 3-year average of 9.5%, which is great, and it has a current yield of 5%, which actually has dropped a little bit here recently because the stock has appreciated in value very, very nicely. Okay, and then Bell, it doesn't get any more consistent than Bell. They've been a consistent 5% increase at the start of each year, so I expect the same in 2024, hopefully. The stock has depreciated quite a bit, so therefore the current yield is very high at 7.5%. I have been adding recently because I think that's a pretty attractive yield. Okay, next, Scotiabank. So again, they have a very high yield at this point too, because again, a lot of these stocks have been beaten down quite a bit. Their dividend growth hasn't been as strong. They did have this nice boost here during the pandemic when they were finally allowed to increase their dividend. There was a period of time there where banks were not allowed to. So in 2021, there was a lot of fairly generous increases. Okay, Fortis, again, sort of in the sweet spot. It's really nice when a company commits to a consistent range of dividend increases, and Fortis is definitely one of those companies. Pembina, not great, so 2.3% this year, 3.6% last year, and nothing in 2021. But their stock has held pretty strong in terms of price, and their current yield is 5.86%. Emera, kind of the similar, again, another utility like Fortis, not quite as high as Fortis, a 4% average, but again, they have committed and been consistently increasing their dividend year in and year out. Again, I could have gone back further, but I just kept it to the last 3 years, because I kind of want to know what's going on here recently. Okay, Enbridge has been consistent at 3%. Bank of Montreal, again, they had this big increase towards the beginning of the period when they were allowed to reinstate dividends after the pandemic slowed down a little bit. All in all, it works out to a 3-year average of 12.3%, even though the increases are kind of all over the place. Savaria, again, more of a growth company as well, but they have had a history of increasing their dividend as well. They did not do any increases last year, so I'm hoping we see one this upcoming year. Their financial results have been pretty strong, so it's not like they're struggling in any way. Maybe they're just holding off given the current market environment that we're in. Okay, then Power Corporation. Had a nice one in 2021 and nothing in 2022, and then 6.1% this year. And again, these 0%, it's a little tricky to kind of see because sometimes it's right at the end of the year and then the beginning of the following year. So it's just the way it worked out for Power. They didn't do any increases in 2022, but they did one at the beginning, I think the end of 2021 and maybe the beginning of 2023. Okay, then Aecon. So Aecon, their average over the last 3 years is 5%. They did not do any increases last year. I know they were struggling a little bit financially, so they might have, be holding off again until things improve a little bit. This next one, Algonquin, if you've followed things at all, you are aware of their situation. They had to cut their dividend 40%, but in previous years before that, they had a very consistent track record of increasing their dividend. I have cut my position down with Algonquin, not just because of the dividend cut and the price, the stock price issues that they've been having, but they've also talked about moving away from the renewable sector and selling their renewable assets off, and that's part of the reason why I got into them in the first place. Okay, so then we have TD here, very consistent, just like all the other banks. It works out to be 6.9% average. Again, this 0% here, take that with a grain of salt because that was when they were not permitted to increase their dividends during the pandemic. Okay, Marigold Resources, copper stock. So again, this is not going to be a consistent increaser, but it has a nice yield, and if you believe in the need for copper in our world, it's not a bad place to look if you also are a dividend investor. TRP, they decreased their commitment here, I think last year, to a lower percentage. They used to increase at a higher rate percentage, but I mean 3% increase per each year is still pretty significant, especially when the starting yield is 7%. So nothing wrong with that. Canadian Net REIT, REITs have been struggling mightily here recently, but this REIT, unlike many REITs, most REITs do not increase their dividend on a consistent basis, but they had a pretty decent track record until this year. It was a much smaller increase, so we'll see how that plays out. Imperial Bank, pretty consistent, 7.3% average, so that's great. Brookfield Renewables, kind of like Bell, pretty steady at between 5 and 5.5%, with a nice starting yield of 4.74% currently. National Bank, I believe, the second highest 3-year average here in the stocks that I own. But again, that's probably as a result of their results have been very strong, but their starting yield is also a lot lower. But over time, your yield on cost will increase a lot if these increases keep up. Sun Life Financial, again, very generous increases here. Works out to be an average of 12.5%. Metro, super consistent like Bell, except it's double, right? 10%. They've been increasing their dividend by 10% very consistently over the years. But again, it's a lower yield of 1.8%, but it makes up for it with the growth in the stock as well. And finally, relatively new position of mine, Canadian Tire. They had increased it a lot in 2022. They've only committed to a 1.5% increase here recently for the start of 2024, but a nice starting yield of 5%, and it works out to be a 3-year average of 15.9%. All right, so hopefully you enjoyed this video. If you have any, please put any comments in the down below. If you own any of these stocks and you think they're still good ideas, or if you think there's stocks here that you don't like and think that are not good investments, or maybe you have ones that are not included here, please let me know down below, and let me know if you also think that dividend growth is an important thing to look at when considering your investments. Right, so thank you again for watching. Please like and subscribe, and I hope you have a fantastic day.